wanted to say two very quick things and then let Elaine and Frank take it away. For those that work with our agency, you can access Frank. I wouldn't say 24/7, but maybe email-wise 24/7, but legal@ccia.com. Also, our website is also churchandcasualty.com, but we switched to ccia.com, not to be confused with California Cannabis Independent Association. I don't know how we got that .com before they did, but we did. And also, I wanted to introduce back there, wave Cecilia, if you could please. Hi. A little higher. There you go. Cecilia Matthews does our finance on call, and so Cecilia is a great finance resources for our customers as well. So if you have worked with Cecilia, please say hi to her. All right, take it away.
Okay, we're ready. I'm going to let you run the PowerPoint. You have to stand this way because we're on camera. Okay, that's good.
Okay. Keep my distance.
Yes.
Okay.
So, anyway, first off, before we start, we're going to talk about payroll this session, and this is all pretty much from an IRS perspective, and we'll make a couple of distinctions in that way as we go through it. Just a huge thank you to Travis for buying practically the first 100 copies of the book that came off the printing press. So honored that you he's done that for you. I'm excited that you have the book. I'm excited to finish the book. I tried to write this book about compensation and payroll, answering questions I get all the time. And so then I also tried to answer the question in a way you could understand it. So I guess you can email me and let me know if I accomplished that or not. I did hear from one client this week who said, okay, I've been reading your book. Now I have some questions. I thought, okay. But we are really excited about it. We're going to talk about payroll. This is obviously something I'm very passionate about, mainly because the number one way that a church will write a check to the IRS is because of payroll errors. All right? A lot of things we talk about revocation of your tax-exempt status. Yes, that can happen. A more likely scenario, though, is that you will mess up your payroll and you will write a check because you messed up your payroll. That I see all the time on a regular basis in my practice, and I've been doing this for about 30 years now. And so the other thing to bring this to light is that several years ago, the IRS came out and really voiced their own frustration that so much of compensation, if it does not go through ADP or the paychecks or their payroll cycle, never ends up getting reported correctly. So one of my passions in writing this book was also to help you know what's taxable, what's not taxable, what's a fringe benefit plan. Why is it one church gets to do this and it's tax-free and another church gets to do it and it's not tax-free? You know, I also tell you that pastors comparing taxable fringe benefits or any fringe benefits give you the worst advice ever. Well, my pastor friend over here, he doesn't pay tax on it, and they do it all the time. So anyway, a lot of that, just 30 years of experience went into the book, so I hope you'll use it as a resource. I really think there's something in it for everybody that's a part of the process throughout the compensation process in your church. All right, we're going to talk about... Will you agree?
Yes.
Okay, that's good. Y'all should write that down. Frank and Elaine agreed at... we're going to talk about worker classification first. And we have 4 basic types of workers in our churches. This is from an IRS perspective. And one of those is obviously our wonderful volunteers. We'll talk about that in a minute. Our ministers are a classification unto themselves with their payroll peculiarities. And then our non-ministerial employees, and then our independent contractors. And we're going to talk about all of those people just a little bit today. So we're going to start talking about volunteers because I made you put all your questions on hold. And so a volunteer, in essence, is workers that are not compensated. Frank talked a little bit about volunteers from a DOL perspective. So that's the Department of Labor or your state labor laws. So that's going to govern when do you have an employee and all of a sudden wage and hour laws apply to them. for instance.
Correct.
From an IRS perspective, we look at volunteers and we go, when do we have a volunteer, or when do we pay somebody taxable income and all of a sudden it's subject to federal income tax withholding, or Social Security, or Medicare, or W-2 reporting. And honestly, those are a little bit of different things under the two different regulations. So whenever you ask questions about employees, it's always really good to figure out, am I talking about employment law, labor law? Am I talking about the IRS payroll law? So for the IRS, we all do it. Well, I don't say we all do it. I teach my Sunday school growth group class every Sunday morning for ladies at our church. And at Christmas, you know what I got? I got a wonderful thank you note card, Christmas card from my church, and in it was a gift card. Yes, you're right. And it was $25. Okay, so that's great. They're thinking of me, and we have a lot of volunteers, and I love that, and I love that appreciation they express to me. So under Frank's law, he's like, gosh, now you're an employee, Elaine. I'm like going, okay, no, I don't think any stretch of the imagination I'm their employee. But so we talk about gift cards a lot because compensation to volunteers, we have to, as Frank demonstrated earlier, we really do have to look at everything. So we have to look at non-cash, and we have to look at cash, and we have to look at gift cards. So the IRS, for the IRS, we have this great kind of out. And in the law, it says that if your amounts you pay to someone are less than $100 a year, you don't have any obligation for FICA, Social Security, Medicare tax withholding and matching.
And this is not true for California state taxes. That is true for federal
taxes.
income taxes.
Yes. So from a federal perspective, there's no taxes owed on my $25 gift card. And we live in Texas. We don't have any Texas state income taxes. So, from my church to send me that $25 gift card, they didn't really have to send me a W-2 for that. They don't owe any federal Social Security and Medicare taxes. And federal law says if there were no taxes that were supposed to be withheld from the pay, and it was up to $600 even, you don't report it on a W-2. So you do have a couple of outs there if you're giving the occasional gift card from a federal perspective, but then you have to think about your state perspective also.
Right.
Now, I have a rule about, people ask me, what's a taxable, tangible gift? And my rule is that if you can eat it or it dies, it's probably not taxable. That's your fruit basket.
De minimis
de minimis, or a de minimis amount. So that's your fruit basket and your flowers that we give to employees. I'm not too concerned about that. A de minimis amount that regulations actually talk about, movie passes. It even talks about sporting tickets, but those were written a long time ago, and sporting tickets, I think, were cheap. And so, we might not look at that as a substantial tangible gift would be like, I've had churches give away cruises to like Volunteer of the Year, and everybody's eyes just perked up because they all want to know where they need to go to church now. It's not our church. I just got the $25 gift card. So volunteers. So in general, also we did not let them explain for the Department of Labor, which you would not have this in California probably, but the Department of Labor also allows them to kind of give me a $25 gift card without turning me into wage an hour.
Maybe.
Probably.
Yeah. Well, the problem, prior to 2004, the Department of Labor said, okay, you can retain your volunteer status as long as the compensation received is less than 20% of the value of the services being rendered. And so we're not going to make you an employee for minimum wage and overtime and stuff like that as long as it's a small amount. In 2004, the regulations were replaced with a facts and circumstances test. We're just going to look at it and see what's fair kind of stuff. When government employees are looking at what's fair, that's not the same definition you use as a church employee. So what my experience has been since 2004 is they go back to the 20% rule. They're much more comfortable with a bright line like that, and so the examiners are still using the 20% rule. as a guideline.
For nonprofit organizations.
For nonprofit
We saw earlier that their bright line test for for-profit organizations is nothing at all, anything. For nonprofits, they're still acknowledging that our great labor base is our volunteer sector, and that every once in a while somebody gives them something to appreciate them. All right, the next group of people we want to talk about is classifying ministers for payroll purposes. So, once again, we're going to draw a distinction for you. Frank talked about employment law classifications, and that is the ministerial exception that he went over so well at the end of the last session. So the ministerial exception, which accepts you from all labor laws, including wage and hour, has to do with just that set of laws. And you do need to go through and classify all your employees for the ministerial exception and write your job descriptions and do a great job on that. You almost have to classify employees for both laws, though, because at the same time, excuse me, we have to classify the ministers who work for us for federal income tax purposes, all right? That's not the same test as for labor law. It's a very different test, actually. So you have to do both tests, and they may not necessarily be the same people.
Yeah, definitely not.
So step one is we have to determine who's on staff that is actually a commissioned, licensed, or ordained minister. And believe it or not, I talk to people all the time that will come to me and say, you know, I didn't realize our music minister was actually licensed. Okay. You need to know who all those people are. So when they're hired in, one of the questions needs to be, do you have credentials from any church? Because some churches think, well, I didn't credential them, or my denomination didn't credential them, so therefore we don't care. But the fact is the tax law does care. So, do they have credentials from any church? You need to know that.
So if you're in a Presbyterian church and you hire a children's director, because you can't use the term minister, but that children's director is commissioned as a minister by a Baptist church, you must treat that person as a minister for tax purposes. You don't treat them for internal polity. They're still not a Presbyterian minister, but they are for income tax, Social Security taxes, Medicare taxes. They are still going to be a minister, and the IRS has clearly said that it doesn't matter whether the church that ordained them is the same as the church that they're serving in. So it doesn't really matter which one they go. So a lot of times we'll find in denominational churches, they'll say, oh, they're not a minister. Oh, really? Do they have a minister credential? Well, we never asked the question. And the IRS asks that question in an examination. So you need to have written proof in your file, in the personnel file, that they have a minister credential if you're going to treat them as a minister.
Because you can't figure out if they're going to pass step number 2 here in just a minute unless you know they've passed step number 1. So for the ministerial exception under labor law, you don't care if they're credentialed. I mean, it might lend to a test, but
it helps.
It helps, but it's not a determining factor. For the Internal Revenue Service and payroll laws, you have to know whether or not they're a credentialed minister. Because to be a minister for payroll tax rules, you have to be credentialed. So that's the first step, is to identify those people. And then the second step is to look at all those people that you have credentials on and go, okay, are these people performing ministerial duties? What are they doing? Now, unlike the labor law definition in Hosanna Tabor that we got, 15 minutes a day will not cut it for the IRS.
Nope.
The IRS says if you're going to be performing ministerial duties, it has to be the predominant amount of your duties, and they define that to be more than 51%. All right, so this can't just be, oh, well, we've also defined him to, as part of his paid duties, he is required to teach a class on Wednesday night. But he spends the other 35 hours a week doing janitorial work. That is not going to work, all right? So the 4 major duties we have include the performance of sacerdotal functions, which is a really fancy term for saying performance of duties that normally are reserved for ministers. The IRS thinks this is only baptisms and funerals and weddings and communion, sacraments, but in fact, it's actually a lot broader than that, so don't let the IRS scare you on that. It's basically been determined to be anything we reserve for ministers or define ministers to do. So the best case I had with that, I actually did have a Baptist church challenged. This Baptist church had 2 ministers. They had a senior pastor, and then they had the pastor of music and education. He filled both roles. And so the IRS came in and they decided the senior pastor was a minister performing ministerial duties. Wasn't that generous of them? And then they decided that the minister of education and music was not performing ministerial duties. And we're like, why? Well, he's not baptizing people and performing weddings and doing funerals for the majority of his time, and he doesn't preach on Sunday mornings. And I was like, excuse me? And so we went through this whole analysis of music being a part of the worship service and education and picking the education curriculum and all of that being pastoral. And then he said, well, he doesn't do all of these. So he's not performing sacerdotal functions, conducting religious worship services, control, conduct, and maintenance of a religious organization. That's your administration one. Or teaching at theological seminaries. I said, you're trying to tell me that every minister has to do all 4 of those? Because my senior pastor isn't teaching at a theological seminary either. I said, your whole definition here is just skewed. Eventually, we won. So predominantly, when he attempted to tell me what sacerdotal functions was, and he used a specific court case, unfortunately, he used the court case that Mr. Sommerville had won. And he incorrectly used the court case Mr. Sommerville had won, of which then I got to use the court case on my behalf, and after that, he kind of gave up. We had about $10,000 at stake. It wasn't a huge amount, but we did have a senior pastor who didn't want that precedent out there. And so, fortunately, we cleared up the whole matter for about $4,000. And in the scheme of IRS audits, that's really not that bad. And so we were able to go on. But one of the things that really triggered all of this is the music minister / education minister had gone on to another church, because remember, we're always working behind the times. And they had never kept a copy of his licensing certificate to prove he was a minister to begin with. And that made the agent question whether or not he was ever a credentialed minister. And then even though we proved that, it just let this agent dig in. So having proof of your ministers and going through this analysis is really important. Okay? So you want to make sure, and once they pass duties 1 and 2, step 1 and 2 of the previous slide, you don't have an option. You have to treat them as a minister. You don't get to pick and choose. They don't get to pick and choose. You don't get to say, would you like to be treated as a minister or not like to be treated as a minister? You are then defined that for federal tax purposes. And that means, the next slide. Whoop, wait too many, go back. That's your pastor or your minister right there, the little 2-headed guy. Ministers have what we call dual tax status under the tax law. And so for federal income tax purposes, in most instances, they are defined to be an employee as common law employees. That means they get to participate in your benefit plans. If you're not a common law employee or an employee, you don't get to participate in most benefit plans. One of the things I did in the book is when I went through some common benefit plans, I specifically said, independent contractors don't get to do this. So you don't want to be putting ministers on 1099s that should be on W-2s because you can affect your benefit plans. The other thing, the other head they get to wear is that they are always, I can't say this enough. I've said this so many times in 30 years, Frank. They're always not subject to Social Security and Medicare withholding and matching. Not optional. Once you have a minister who is credentialed and performing ministerial duties, step 1, step 2 equals nothing in boxes 3, 4, 5, and 6 on the W-2. No exceptions.
And the problem is that I handled this exam where the church withheld Social Security and Medicare taxes from their pastor.
Well, because he hadn't opted out.
Because he hadn't opted out of Social Security,
And that's
so we
what we
have to
always-
withhold for it. The IRS took the position that because the church withheld Social Security and Medicare taxes, that means that the church said that he's not a minister performing ministerial duties. And that's an admission against interest, and I'll never win that case.
And so,
They had to
no
pay-
housing allowance.
And then they had to, no housing allowance, and they hadn't paid payroll taxes on the housing allowance, so the church had to pay payroll taxes on the housing allowance because the church admitted that it treated that minister as a non-minister for payroll taxes. Okay? So that's a very serious error if you make that error. But nobody in here would ever make that error, right?
And that is what we usually hear. I have churches come to me and say, well, Pastor Bob didn't opt out of Social Security, so we have to withhold and match. No. Pastor Bob opting out or not opting out never, ever affects what the church does on their payroll. Because you're never allowed to withhold and match on a minister who's performing ministerial duties.
Now, the match is just for Social Security purposes, not retirement.
So yes, the match is just Social Security purposes, not retirement. We're not talking about retirement. Because as an common law employee, they're going to be able to participate in all your fringe benefit plans. So that's the number one thing that we get the most corrections on. Now, if you've withheld and you want to fix it and make everything right, that is possible to correct that. And we do about at least 2 of those a year, it seems like. So you can go back and restate your payroll and do everything correctly. Every once in a while, I get the one that treated someone as a minister and they weren't credentialed. And that's just not good news.
You hire this youth minister, and he doesn't have any credentials. But you thought he did, so you treat him as a minister and give him the exclusion from the withholding of Social Security and Medicare taxes, and you give him a housing allowance. And then you later find out, oops, he doesn't have a minister credential.
Now, ministers also are not subject to mandatory federal income tax withholding, like the rest of us are as employees. And so they have to give you written permission in order to withhold their federal income tax from them. And so when they do that, a lot of them will give you written permission to withhold a greater amount to help them pay in their Social Security taxes they pay through self-employment tax. And that's fine. But literally, a minister can only have something in box 1 on his W-2. Just compensation. And that's okay. And so earlier when I said we had the new tax on compensation packages of in excess of $1 million for people who work for nonprofits now, that new football coach excise tax, the reason it doesn't hit our ministers working in our extremely large mega churches who are making more than $1 million is because of this law. So when they created that excise tax, they defined wages according to the code section which defines wages for withholding federal income tax. And ministers' wages aren't wages for withholding federal income tax. So whether they slipped the ministers an out into the system purposefully or it's an accident, I cannot tell you. I can just tell you the effect of it is that the more than $1 million compensation excise tax that is now due by nonprofits is not due on anybody performing ministerial services. All right. That's our ministers. So now we're going to talk about so I kind of do this in both labor and payroll, like IRS. The first thing we do with our list of people is we figure out who our ministers are, right? And I always say we've got everybody on the table, and so we figure out who our ministers are because they're the first people we just want to take off the table totally. And then we've got all our workers still on the table, and so the next group of workers we want to be able to take off the table is our employees and figuring out who those are for federal income tax purposes. So we have 3 areas of consideration, and this is your favorite, to start with behavioral.
Yes. Having tried a bunch of these cases early in my career, I haven't tried a case since 2011. Can you believe that? Although one of my partners tried to get me to try a case starting tomorrow, and told them that wasn't a good idea. But basically, when we're talking about who is an employee, for tax purposes, what we're looking at, all of them boil down, all of the cases I tried boil down to one thing: who controls the details of how they perform the services? And so this behavioral control is who controls what they're doing. Remember, independent contractors, you set a goal or a job or a task, and you don't tell them how to get it done. You just say, go do it. You don't provide them tools, you don't provide them instruction, you don't provide them anything. You just hire them. So when you hire a lawyer and say, sick them, okay, you're not controlling how they do it. They are. They're an independent contractor. So this is IRS's test, and it's never been upheld by a court, ever.
Well, we have a lot of people who have been working in this area for a long time remember what we used to call the 20-factor test. Okay, they kind of took the 20 factors and split them all up and repackaged them into these 3 groups.
And California still uses the 20-factor test, but all of these are going to boil down to the same thing. The financial controls is who's getting paid for what. Do they have responsibility to pay other workers? You know, that can help indicate an independent contractor.
And who has the ability to make a profit or loss on it? Who has the responsibility to buy the tools needed to do the job? If you hire me to do your bookkeeping, if you hire my accounting firm, you know, you're not providing any of my computers, you're not providing any of my tools, you're not paying my employees to get that done. You've hired my firm to do that. On the other hand, if you hire a bookkeeper and she happens to work out of her house, and you provide her with the computer and her internet, you reimburse her for her internet, and she gets to turn in any out-of-pocket business expenses that she has, you've got an employee there, you don't have an independent contractor there. And so this financial control becomes in as the close second, because it's really who's looking to be responsible for all the expenses to do the job.
And then the least important is the relationship. What do you think you're creating? If you have a written contract, that helps, but not much, where you say you're an independent contractor. Where most of these cases come out, in fact, I was on the phone last week with a client where they had contacted, an employee had contacted the IRS and said, I'm really an employee, not an independent contractor. And they had filled out, there's a form called SS8 that they get to fill out and send in, and this worker at a church had filled that out, and the IRS had written to the church and requested that they fill out the SS8 also to determine, so the IRS could determine whether they were an employee or not. After 5 minutes of discussion with the client, we determined that they should concede that this worker is an employee. And in 30 plus years of doing this, I've yet to see IRS come back and say somebody's an independent contractor. They're always going to come back with that. So where this happens, the other thing that you need to remember is frequency of the services is not an issue. So if they do it one time for 1 minute, that still can make them an employee. And the costs that you calculated.
The cost of misclassifying your workers, there's one program that basically says, okay, as long as you prepared all the 1099s, or even if you didn't, one program allows it to be about 14%. However, it can be as high as 35%. So when you have misclassified someone, there's a definite dollar cost to that if the IRS comes in. And the IRS does have the legal authority to audit any of your 941s at any point in time. Now, they have guidance out right now saying they don't want to do that, but the fact is they can do that. So that's why I said one of the biggest checks we write with the church is with payroll taxes, and this is it. A lot of times they'll reclassify employees and then assess all the taxes with that. Now, where are some common classification errors? These are the ones we find most often. It used to always be child care workers, but we're finding that less and less. I think that with all the background checks we have to do and all the care and everything, nobody really wants to look at somebody and go, yeah, we don't control our child care workers.
Well, and where we're seeing this come up, and it came up, I've got an email I got to return when I get back to the office. Home small groups. Many of our home small groups have children, right? And this particular church just said, okay, small group leaders, y'all arrange for y'all's a Texas term, sorry. But y'all arrange the child care at your small group and we'll reimburse you for that cost. And something bad happened, and so here's the situation. Do I want to be arguing that this child care worker who was working for the church, we're reimbursing that, was not background checked, did not receive our training, did not do any of our screening, interviewing process, any of those kinds of things? We just added about 4 zeros or 5 zeros to the judgment. Okay? We had the situation a few years ago where a 2-year-old fell on terrazzo tile during small group, injured her head, and she has permanent brain injuries now. The church insurance company, not yours, but they had to pay out the policy limit, which was $2 million. That was at a church small group where a 14-year-old was watching the 2-year-old with no adult supervision. Okay? You can't afford that as a church. And so what you want is, if you're going to have child care, that you provide, and by the way, if you have a small group, that is a church event. Everything that happens out there at that small group meeting is the church's responsibility. So you want those workers to be background checked, go through your training, have the interview process, keep them so that you know those children are going to be safe. Our son-in-law and daughter are part of a small group. They had a small group at their home. And last time, when we were talking to them 2 weeks ago, they had how many children at their house?
Oh, they have about 11 children.
11 children, 14 adults. Yeah. Okay, they're in a 1,400, 1,300 square foot house. Okay, do we have a child care issue there? Potentially, if something bad happens. Okay, that's something the church cannot ignore. Now, I hear the pastors on the other side, small groups, and I saw the sign out there at Cottonwood say small groups. And by the way, we have signs at our church that say small groups are a big deal. And we have small groups at our home church too. So it is very important that you put those child care workers on your payroll, count them for W-2s, don't do it contract labor, because that's not going to help you from a liability perspective. Now, I do have a few churches that have outsourced that, meaning they hire a child care babysitting company who backgrounds checks, and then they send people to the homes to do the child care, and the church pays for that. I'm comfortable with that because that babysitting service has a multi-million-dollar liability policy. They're background checking, they're doing the training, they're doing all the things the church should have done. And so I'm comfortable with that arrangement, but don't treat them as independent contractors.
The next big group we have, and we get a lot of pushback on this, is our musicians. All the rulings basically out there say that if you can select the songs and determine how they're going to be played and when they're going to be played, that the musician is just following those instructions and they are an employee. All of those rulings came out of the secular industry. They didn't come out of the church industry. One ruling I read a long time ago was about a nightclub, and the ruling actually says, we're not sure whether the band leader is the employer or the nightclub. We just know the musicians are employees of somebody. Okay, so in most instances, now your musician that you hire, if you're going to have a ladies' event and you hire someone to come in and do music for that event and they have all the control over that, then they're probably an independent contractor. But your general musicians that you tell when to show up and where to show up, and they're under the leadership of church employees, And they're on church property at church services, and under that rehearsal time and everything, they're going to be employees.
The largest independent contractor assessment that I've had in a church was over musicians, and it was a little over $500,000. Now, they had a school of music, so a lot of those musicians were in the school of music as well. But that's your biggest problem. Okay.
Okay, well, and the last one is, I just wanted to say one more thing. Workers on a trial run, I get that one a lot. We're just going to try them out for 30 days, and then we'll decide. No, you won't.
On the maintenance workers, what about contracted maintenance workers?
What about contracted maintenance workers? Again, it depends. If you are not controlling anything but the results, and you're not providing any tools, any chemicals, anything, you just say, like I say, okay, I want my yard at the church mowed, edged, cleaned up, trimmed up before 7 a.m. on Sunday morning. I don't care how often you do it, I don't care when you do it, and I'm going to pay you X number of dollars. And I'm not doing anything else. I'm controlling the results, then that could be an independent contractor. On the other hand, if I say, okay, I want these chemicals applied to the lawn on this schedule, I want it mowed on this schedule, and by the way, here's our lawn equipment, here's our edging equipment, trimming equipment, now you've turned them into an employee. So those kinds of things can work, but it's really difficult because the way churches want to do it is we want it on demand, because we have events going 7 days a week in a church. And it's very difficult for us to have on demand with an independent contractor.
All right, so what if we've just sat here and we've heard something and we're like, oh no, my musicians are employees. What do I do? Does this mean I just run back to the church and hand W-4s out to all of them and put them on the next payroll? No, we don't want to do that, because the IRS a few years ago gave us a great way to reclassify people without costing a lot of money. And so we always like it when the IRS gives us a way to do something without costing a lot of money. So the IRS came in and said, we're so tired of all these independent contractors who shouldn't be independent contractors. We're going to give you a way to turn them into employees on a prospective basis. And when we do that, it's not going to cost you any money for the prior years, and we're going to close the door on anybody challenging that. So the voluntary worker classification program comes in and says, we tell the IRS who we're reclassifying. You have to file it 60 days before the start of a quarter. So right now, the earliest you could reclassify anyone is January 1 of 2019.
So you got about 30 days.
And you've got about 30 days to do that, to get the form in, to file it. So you don't want to go back and just all of a sudden change everybody. You want to really look at this reclassification program. I had a client who did dramatic productions. And so we reclassified all the actors because they're totally under our direction and our control. And we were able to do that on a prospective basis. And now all the other years they were independent contractors, nobody can assess us taxes on from the IRS. And so you can't be under a payroll audit and take advantage of the system, and you can't have already reclassified them and take advantage of it. There is a settlement fee, but it's really literally pennies on the dollar. So
we highly recommend this.
All right, let's talk a little bit about general compensation rules. This is one of the things that when we started just brainstorming with the Christianity Today staff on what the payroll compensation book would look like, I said there's just some core concepts I want us all to understand, and this was one of them, just some basic compensation rules. And that is, what is compensation and why is it so important that we do a couple of different things with it? So we're kind of moving out of just some real technical definitions here versus employee versus independent contractor for a little bit. And let's talk about some core concepts with compensation. So we can only pay people what's reasonable. And so one of the statements I've made is, I know it's so hard for churches to think we might pay someone unreasonably, except unreasonably low, right? But we do have to prove up that we're paying reasonable compensation for the services offered. Someone can't come and work 5 hours a week and you pay them $50,000 for the year based on 5 hours a week work. Is that reasonable? Well, I know that if you're hiring Frank for 5 hours a week, that he might be worth $50,000 a year, but most of us are really probably not. So we need to be able to look at that and prove that up. There are lots of different options out there. We have salary surveys out there. We have compensation experts out there. The higher the position in the church, the more likely you have to use an independent salary expert. All right. The larger the church, the more likely you have to use an independent compensation expert. Just because a lot of our salary surveys that are done are really more, the reporting in them is the more mid to lower range churches. And so our larger churches kind of get left out in the cold. Now, if you all want to report to the next salary survey that someone's doing, that would help those numbers.
Yeah, because what we've found is like the Church Network's salary numbers and the one that Christianity Today is doing now and others that are doing salary surveys, the people who are paying on the low end participate in those surveys, and the ones on the higher end look at the surveys and say, ooh, our numbers are way bigger, we're not going to participate. And so my experience has been that the salary surveys are usually just the bottom 50%. The top 50% are not. So a lot of times we will resort to compensation surveys that are secular. So if it's a bookkeeping position, I'm going to go on salary.com or I'm going to go into some other secular source to figure out what a bookkeeper's supposed to be making with similar qualifications and experience and responsibilities. You don't have to use, you're not married to just church sources. You can use secular sources, although it's a little harder to compare senior pastors in the secular source. Although I had one compensation expert compared the senior pastor of this church to an entrepreneur. This pastor has started the church in his living room, and in 25 years it had grown to a $50 million a year church. And he said, okay, there aren't many church people that have done that. And so what he said, the best comparison is to go to the entrepreneurial compensation categories. And if I were an entrepreneur that in 20 years built a $50 million a year business, what would I be compensated? And that number was way above any pastoral compensation surveys. But I was very comfortable because of his logic in doing it. So I recommend compensation experts, especially for the larger churches, and especially if you're getting into bigger numbers.
So what the compensation outside numbers do is they create what's reasonable compensation, and that's what I call the umbrella. So you can't ever pay more than the umbrella, and everything you pay has to fit in under the umbrella. So think of it that way. You don't have to pay the top number, but it has to fit in under the umbrella along with everything else. And that's where we really begin to drop the ball a little bit in the church world. And that is, we look at compensation and we go, okay, so this is what is on their paycheck. Well, that's not what compensation is. Compensation is everything that benefits the employees. Whether it's taxable or not taxable, that's not a part of the equation yet either. So what are you looking at that benefits the employees, with the exception of a technical term that we call Section 132 benefits? So Section 132 benefits are this group of fringe benefits that are generally associated with our job in some way, and we don't have to value them for compensation and for reasonable compensation. And so that includes our qualified transportation fringe benefit we talked about before. It includes continuing education. It includes discounts at the church bookstore under the employee discount rules. So there's just a group of those benefits. We don't have to say, okay, this is fringe benefits. But I had a client call me one time. I'd worked with her for like 20 years by this time, and she said, so do I have to include the 403B contribution we make every year to the pastor's account in his total compensation package? I was like, yes. When did that slip past us? So what we do is, Frank, we need to look at everything that's benefiting our employees and figure out if it fits under the umbrella. And so that's cash, housing, auto insurance, medical insurance programs, medical programs, child care, retirement, tuition, clothing, love offerings, gifts, bonuses, anything like that. So I'm not determining at this point whether or not it's taxable or not.
You're just trying to accumulate all of the ways you bless your pastors or bless your employees. So some churches will pay for the tuition so the pastor's children can go to summer camp. Some of them will pay for the pastor's spouse, male or female, to go to the men or women's retreat for free. There are all kinds of different ways that we think about blessing our pastor. I had a church earlier this year bless their pastor on the 20th anniversary of them serving the church with an all-expense paid trip to Israel. Okay? We have to plug those things in. Just because we want to call it an anniversary gift or a love gift doesn't change that it's not part of the umbrella. It has to be part of that umbrella.
So you want to figure all that out, and then you want to see. So my trick here, I kind of dropped the whole tip, tricks, and traps ball here going through this. But my trick is to identify everything, and my trap is don't forget about your non-cash items, like the kids going to summer camp for free, or the medical insurance premiums, which are paid out through payables, or anything of that nature. So don't forget your non-cash. Now, our trap here is we forget to write that down sometimes. So this whole analysis needs to be written down, and that's very, very crucial. When an organization, a nonprofit organization, is audited by the IRS, one of the first things they do is ask to see the minutes or the documentation which will prove up compensation packages. And sometimes we're really good at documenting that base compensation, maybe health insurance, but all those other little things kind of fall by the wayside, like the tuition discount at the school we're going to give just to the pastor, or the camp fees that we're going to pay, or the life insurance premium that we've decided to pay for someone, or housing that's provided. Maybe even to a non-ministerial person.
Yes.
And so we forget to write that down and document that. So we need to remember, we need to write down everything and document it really well. And I really recommend you do that every single year.
Well, and you need to be thinking beyond the four walls of the church. I'm dealing with a situation right now where the pastor, because he's so popular and visible, he typically can't get much done if he comes to the church. So he has a home office, and his assistant comes to his home office and works with him during the week, and that's the connection back and forth with the church. And that's fine. Nothing wrong with that in and of itself. What happened, though, is the pastor's spouse passed away. And now, when the assistant gets there at 8 o'clock in the morning, what's the pastor's first request? Can you make coffee? Can you make a breakfast for me? Can you start cooking breakfast for me? Can you cook lunch while we're working here? Nothing inappropriate as far as sexual, but just the pastor's missing the things that his wife did. And now, what do we do as a church? We are paying a church employee to do personal business. And so now we got to take a portion of that employee's income and add it to the taxable compensation of that pastor. And that needs to be approved in advance. And we're finding out about it after the fact. Okay? So one of the tricks you didn't put up there is when you're approving the compensation package, yes, you're going to put the cash salary and the housing allowance, and then the fringe benefits you know about, like the 403B contribution and the health insurance. Always, I recommend put a fudge factor in there. So, and you say $4,000 or $2,000, depending on the size of your church, of miscellaneous taxable benefits that the church is going to provide if asked during the course of the year. That way we have authority to allocate some of that salary or some of those personal things back to that taxable compensation because it's been approved by our board or by our finance or personnel committee. So always put a fudge factor in the resolution that's approving those.
Okay, so the next step in the compensation process is then to determine what is taxable. And so the basic rule of taxation is everything is taxable until you find a provision in the Internal Revenue Code that tells you it's not taxable. Now, my clients, it seems like, work kind of this way. Nothing's taxable until Elaine tells us it's taxable. And if we don't ask, she won't ever tell us, and we don't ever have to add it. But there's this overriding rule in our tax system that says we pay tax on everything. And so we need to sit down and look at all those benefits and figure out if they're taxable or not. Some things are taxable if you want to hit it. If they're paid one way, but they're not taxable if they're paid another way. So if we give a pastor a flat auto allowance, that's going to go into taxable income. If he turns in business mileage and we reimburse at the current business mileage rate, that's non-taxable, right? Okay, so if I am an employee for a church-sponsored school and I get a tuition discount for my student there through a tuition reduction plan, that's a non-taxable benefit.
A qualified tuition reduction plan.
A qualified tuition reduction plan, that may be a non-taxable benefit to me. But if the receptionist at the church who doesn't have anything to do with the school gets a discount at the school, she's not allowed to get a qualified tuition reduction because that's not part of the qualifying group of employees. And so what we have is we have little nuances in benefit plans that decide whether or not something's taxable or not taxable that we forget to look at.
Well, in fact, one of the things that we dealt with last year in 2017 is one of our church clients, without consulting with us, decided on their own to spin off their school, their K-12 school, into a separate corporation. Well, and their pastors had responsibilities at the school while it was under the church umbrella. But now the school is spun off, and now guess what happens to tuition reduction plans? And when you have 4 kids in the school and the tuition is $20,000 a year, that can make a major impact on that pastor's tax. And we had to work through all of those kinds of things.
So it is really important to figure out, okay, what's going to be taxable and what's not. So here's my big trap: failure to report a taxable benefit for a key employee of the church, or what I call a control party of the church, can result in an automatic excess benefit transaction, which is a transaction that has to be repaid to the church, and then a penalty has to be paid to the IRS. So if we just forget to add something to the W-2, we can end up putting one of our employees in a very sticky situation with the IRS that costs them a lot of money. And we don't want to be that.
The penalty can go up to 225%. So once you repay it, that's 325%. That's a healthy penalty. And there's a 10% penalty on your board members that let it happen. Okay?
All right, let's talk about housing allowance. We talked about
Your favorite topic.
just a little bit. So right now we still have our housing allowances, and so that's under Section 107 of the Internal Revenue Code. The minister gets to request that a part of his cash compensation is designated as housing allowance. The church's only responsibility is to make sure the designation is good and strong. All right?
In writing.
In writing. Before it's paid.
Yes.
So, and the next responsibility, which is an easy one, is housing allowance is never reported on the 941 or on the W-2, with the exception of adding it in to box 14 on the W-2 as an other informational item.
Now, you can designate, a minister may request the church to designate up to 100% of their cash compensation as housing allowance. That's possible. The problem that creates is that means that pastor cannot participate in any retirement plans, because you have to have taxable compensation in order to create a contribution. So the contribution to the retirement plan cannot be greater than the taxable compensation that he receives outside of the housing allowance.
So
Okay?
if any of your church whether it's a denominational plan or an independent plan, if you want your retirement contributions to include housing allowance in its base and calculating that contribution, you must also then go in and test all your contributions again under the legal limits, which exclude housing allowance from that calculation. So I'm not saying it doesn't work, it's just those are two different tests, and you have to make sure you perform the legal calculation if you're going to use housing allowance anywhere in your base of calculating a retirement plan contribution.
Now, reporting, you don't put that housing allowance on 1099 or W-2 unless you choose to do so on the W-2.
Right, on the box 14.
On box 14.
Yes.
And that's just one of the comment boxes that's down there. So,
And I really, as a tax preparer, I just am going to tell you that we love it when you do that. Because then we don't have to question the minister about how much housing allowance they got. And sometimes when we question them about how much housing allowance they got, they just kind of look at us. Like, I don't know. They just did it. And so if you put it in box 14, it just makes the tax preparers that much happier. Then there's one thing that when I say it's your only job, please don't think the church needs to take on any type of role in determining how much of the housing allowance is taxable. There shouldn't be a reporting back to the church of how much the minister spent. The church shouldn't try to do some accounting and figure out what's taxable so we can put it on the W-2. I don't run into this very often, but I do still run into it every once in a while. You're not policing the housing allowance. You designate in writing, report it right, and you're done. Finished.
right.
All right. Report and pay. The lack of proper reporting of your payroll taxes is your number one way to write a check to the IRS. I've already said that a couple of times today. Can't say that enough. The IRS is very unforgiving of late payroll tax deposits. I don't care even if the funds were all embezzled, and which we also, for some reason, embezzlement seems to be easy to do with payroll tax funds. That's one of the ways I guess we just don't double check that. Also, one of the number one ways your people and your volunteers inside your finance committee or your treasurer can write a check to the IRS is if the church fails to pay its payroll taxes and they become a responsible person. So if your church is not paying its payroll taxes, the IRS has the authority to go to an individual to collect those funds from if they're deemed to be a responsible person.
And we don't want that to be you.
No. My trick in this is that if your church will have complete a Form 2848 with the IRS, it's a power of attorney, and give rights to either your attorney or your CPA to get a copy of all the notices the IRS ever sends out, anything to do with the Form 941 or the W-2 or the W-3. Then what that will do is it gives somebody on the outside a chance to get those notices. And that will help you determine if somebody inside is not doing their job. Because that way they can call somebody and go, hey, I just got a notice that you didn't file your 941 for the second quarter. What's going on? Because whenever we find this, it's amazing how many times we find it when someone leaves a position and we open a drawer and there's a whole bunch of IRS envelopes in there. Last, we're going to talk about our independent contractors for just a minute. Okay, so we've talked about classification, so we have all our other workers, we've talked about our volunteers, and we've talked about our ministers and our employees. And then we've talked about paying them and how to set that up and how we want to file and report and pay everything correctly. So when it comes to our independent contractors, here's my rule. Get a Form W-9 from them before you give them a check. Okay? You just be the bad guy right up front. Because trying to get a W-9 out of an independent contractor after you've given them a check on January 25th is not a fun task. And people do it, okay, so I have a professional corporation for my CPA firm, and people do it to me all the time. You don't even have to send me a 1099 because CPAs know how to report their taxes. So unlike attorneys that you have to send 1099s to, no matter what, because they couldn't report all their taxes correctly. The law doesn't require you to send one to my CPA firm, but that's okay. I provide my W-9 all the time. It tells them, makes them feel good, and they're just following my own rule, right? So, other than a big box company, like Home Depot or somebody like that, or your electric company, ask for your W-9s.
Well, and this especially is true if you are making a payment to a non-resident alien.
Well, that's a whole different form, and that's a whole different subject, and we don't even have a slide on all of that.
I know that. And the reason I bring it up is I'm dealing with this more frequently because we're inviting guest speakers from outside of the United States to our churches. And I'm dealing with it half a dozen times a year. We're bringing in a pastor. In fact, I got a phone call last week from a church. They have invited a pastor from Great Britain to come preach at their church. And he is requesting an honorarium, and we're going to pay that. But it's a W-9 BEN.
It's a W-8 BEN
that you need for those. And there are treaties, and it gets more complicated, so you need to call Elaine or I if your church is inviting a non-resident guest speaker.
And then this is the number one mistake I find is somebody forgets to check the box in the accounting system that the vendor is a 1099 vendor.
That's what happened on my IRS audit. We didn't train the accounts payable clerk who set us up as a payable for that year and didn't check the box for a W-9 because we're a PC. But she wasn't aware that attorneys
That is
always...
the number one reason we miss them is because we don't check that box. And then, that way I talked about all of that. So you do want to double check and let somebody know, check the box, because otherwise when you push the button in January 25th, nothing will come out. Now, you generally have to file for rents or services that are greater than $600 or royalties that are greater than $10. You do have to send a 1099 miscellaneous form to partnerships and LLCs unless the W-9 says that they are taxed as a C corporation. All other LLCs should be receiving a 1099 from you. That's the other big area that we find people miss. And then remember that your 1099 miscellaneous, for you filing those with amounts in box 7, any other amounts are due at February 28th. Box 7 1099 miscellaneouses are due by January 31st each year. And then if you don't file, the penalties are up to $100 per form that should be filed. Backup withholding is 24% now. And so if the IRS comes in and does a payroll audit and they didn't file a 1099, you didn't file a 1099 for someone, then they will just ask you to write them a check for 24% of that amount.
All right, thank you.
Let's thank Frank and Elaine. And Frank, all the years you've been coming to California, you were really good. But with Elaine, you guys are great. So it's a package deal from this point forward, so hopefully. So if you guys, well, first of all, who feels empowered today and who feels scared and who feels empowered and scared? You know, it's both, a little bit of both? All right, good, good. So these guys do an annual conference in Fort Worth, Texas. There's still space available? There's still space available, October 22nd, 23rd, so I want to plug that. There's flyers at the back. And also, if you'd like to be a part of Michael's National Association of Church Business Administrators chapter, you meet once a month or once every couple months? Once every couple months. See Michael, get on his email list, because he does cool stuff like this every couple of months. And again, thanks for coming.